Hello and welcome to the Fibonacci free video for Friday, February 10th. This is David, and let's take a look this evening at the US dollar index, right? This is an important market for trading anything that is denominated in US dollars because a stronger US dollar is going to make anything denominated in US dollars, such as the US equity markets, cheaper, right? And a weaker dollar is going to make anything denominated in US dollars more expensive. And while things don't need to trade in lockstep with the dollar, right? And they won't be perfectly correlated. Certainly a stronger dollar will be a headwind to US equities and commodities and pretty much anything else dollar denominated. You can get a sense of that while the dollar index peaked here in September, not in October when the U.S. equity markets turned back down, right? It's generally been in a downtrend in the dollar since then, uptrend in the U.S. equity markets. And then here last week, the dollar index bottomed right here at the Voodoo fireline at 101.31 and has been trading up for the past little over a week. In the same time period that that the S&P 500 has been turning down, right, from last Thursday's high. And we note that because this level that we turned up from, the Voodoo fire line, is the most important of our Voodoo line levels. And what that generally means is that, look, we typically want to see that the more important swings, the larger swings, are going to come from more important Voodoo line levels, and that the smaller swings, right, come from less important levels. So just as an example, at the upper end of this chart for the dollar index, right, this didn't turn right at a Voodoo line level. It went modestly above this 113 tree line, the second most important of the Voodoo line levels, but it came down, tested, and held, and that sent us down through that second tree line all the way down to the fire line. It did get some smaller bounces along the way, right? Short-term support here at a snow line, short-term support here and here from a snow line, short-term support here, and then resistance here at snow lines, and down to the fire line. So look, if we want to get a gauge of of what's going on here in the dollar index, we just need to watch for these snow lines and see how we behave. So while it's totally reasonable to get a little pullback here from the 104 snow line, if we work our way above there, then that will continue to put short-term pressure on anything denominated in US dollars. Meanwhile, turning back down trend-like and breaking that fire line, pushing downwards, will act as a tailwind for those same assets and make it easier for them to continue gaining in value. So I would certainly watch all of these short-term levels. Note them if you want. Overall, this decline from last year looks somewhat trend-like, and so I would think that that we may eventually, in the next several months, several years, eventually see a turn back down if we don't get one sooner. But this could be a large counter trend bounce, and if it is a large one, up towards a 61.8% retracement or so. That again, I'm not saying that's in the card. We want to monitor the Voodoo line levels on the way, right? But something up towards 109, 110 is not out of the question. And should we get that, that could be, as I said, a major headwind for assets. So continue to watch the trend on this. I'm going to monitor the Voodoo line levels to see how it unfolds, and and we will go from there. I hope you found this useful, and I will see you at the next update. Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful. And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.